Good afternoon and welcome to July 7th. Alpha's gold is at 12%. Let's get to the charts. There we are, gold at 12%, and we are clear of the gain tree. Our stop is now here at the first stop of the entry point, and then we're going to be looking to see if we can close above the 172.8. And at that time, then we'll be going to dipper low to see if we can get the DTE, which is November, at 167. So we need to get to November at 167 for the outfit today. We have now gone to our objective for the latter half of this year is date to expiration exit. That's the theory, but we are using stops. Reminder that the original date to entry theory is also known as leap option buying, leaps option theory, and that is there is no stop. You go through the pain. If it goes down, and you'll be looking at maybe minus 80%, 90, and then sometimes it turns around and then hits right back up and gets out, and then it'll go up. The premise of it is that 70% of the time that you will end up in profit because of the market being 70% of the time being up, and then the other 30% when you take your loss and you assume you're going to do 100% loss, you're going to get 100% out of it. Our modification is we are going to take a stop at the entry at the first ratio down here at the negative side, the first ratio on the negative side. That's what will be our risk to start off. And then if it crashes above and moves on up, then we will then move to the third ratio and then let it go from that point. The point will be that we are going to limit our risk, number one. Number two, we will take profit in case it returns and comes back down and hits the third ratio up, comes back down again, and then we just do the trade back over again. There's going to be plenty of opportunities for this. That said, this is gold. At 12%, $75, we are looking at an O of 31.53. So it's a big nut, and like a lot of this. Now remember, all these O's, because the O's are so big in the alpha account, the original O's was when this account was my primary account with lots and lots and lots of money, and then I moved that large amount of capital to another platform in hastiness, which was a mistake, but it's too late now. And but the losses remained here listed at the Thinkorswim TD Ameritrade. Therefore, that's where the losses carry on. That said, we do have another leader at PG, so let's go look at PG and let's see if PG has cleared its gantry area. There we are. And it looks like we have, and now we are, it's 34.95. We are 34.95 already. So now we're looking for a clearance above the 142.90. And again, it's going to be another DTE. So let me go ahead and drop that in here on the notes. And let's see. Yes, this is the strategy, stochastic uptrending, which meant that the 10-day EMA was in the uptrend, and it is a DTE exit. And there we are. And this option cost is 485, and the option there is 485. It's done. So now we have that done, and now this is on its way. So review quickly on the difference in stochastic of the three scanners. The first scanner that we use, what's called my primary, is the stochastic trend. That is price, the 10 EMA, which is what you see is this gold line here, is in the up direction of the time that all the parameters lined up. The histogram is in the up direction, RSI is in the up direction, and so is STO, stochastics. Then all three of these are lined up and then confirm that we have an uptrend in the 10 EMA. That is the STO / in the up direction uptrend. Then the result, the thing will be said for the downtrend. In the downtrend, it would be that this 10 EMA will be going to down direction, and then these parameters will all be also will confirm the downtrend, and that will be for the put when the scanner pulls those up. The next scanner that comes out of this is that price closes above the 10 EMA. So all the parameters you get in the first issue are all in the up direction, but the price closes above the 10 EMA. Now this PG had both. It had the uptrend and the close above the 10 EM. So this got essentially got a double star and got a triple star because we go to the core stochastics, and that's the third scanner, and that is we only consider the stochastics, the RSI, and the histogram in the up direction. It doesn't matter what direction or what direction the EMA is going. So those are the three various scanners that we are using in the stochastics for the remaining of the year for the 6 months in alpha, unless, and there's you always have an escape clause in whatever trading plan you have. Do have a real reasoned escape clause, and that's going to be this: if this account does not start getting back up into high territory that it reached 7,300 at a high point. When I went back and looked at it, we reached a high point of 7,300 about a month and a half ago in May. Now, if we don't get back to that benchmark within, let's say, the next couple of months, then we'll be looking for another Elvis shift come first of August will be too early. So the 1st of September, we'll be looking for another Elvis shift, or maybe just entirely drop STO and go to something else. Because I'm always out there looking to find the I'm not looking for the ultimate trading plan. I'm looking for the more consistent trading plan. That's what. Just get consistency, and it breaks the SPY. I mean, look at here. We are behind. We are -4% versus the SPY 16.5. Now, there's two reasons why this is behind the -4. Number one was that we added additional to the scanner that of the STO was that we went to a weekly chart. So let's go ahead and go to PG for use that here. And we went to a weekly chart right here, and that scanner was that the weekly had to also agree. If the weekly didn't agree, we didn't have any trades. Well, what happened was we only got like 3 or 4 trades in all of June using that scanner. And it didn't work. It didn't give us any opportunities, and actually dragged down the account because the trades that we did get didn't produce any money. So that's why that scanner has now been regulated back to the stable. So we are now dealing only with the 4 strategies that I just mentioned now, and of the 3 STO scanners that I went through just now. Okay. So that said, there's PG, and PG's already been adjusted, and then this is so all of these are going to be adjusted to that DTE. That said, we did have an exit. RCL got stopped out. Now let's go and get to the RCL numbers and see what happened there. So here at RCL, this is what's happened here, and was that it broke through the first ratio. We are willing to risk 1 unit to make 3. And that's what happened. It broke through and got stopped out for -32.8%. We were anticipating 19.7, so our projections were off. We're only projecting losing 108. We got stopped out at -195 with $2 in fee, coming out to 197 with an additional carry of the old loss of 1666. Now we have a new loss of 1863 for RCL. Do I panic? No. Because eventually this is going to turn around. It's going to reach a point that is going to turn around, or the scanner for the puts might get into it and get on down. Okay, with that said, that is really the conclusion there of that, and we have about 30 seconds. So let's go run the scanner for today and knock it out real fast in the closing seconds. So we're going to go right to the heart, because I'll catch all of these down here, and then I can determine about that. So this is the uptrend for the alphas, and away it goes. And we have 2. So now EJW is already in play. RTX we got stopped out of the other day, so we'll put that down here as a call for RTX. And now we'll come back over here and come back over to our other scanner of the down zone for the alphas, and away it goes. And we have AMD. So we have a put for AMD, and we will call it for the night. Thank you very much for checking it out and coming by and sticking with it. Take care, and bye-bye.